if you really think that everything's going to blow up under this Trump situation with tariffs, retaliatory, and just the global demand slowing that we see, then I would be in long gold. I would be in long commodities. Bonds and equities are going, I'm not saying it's going to be 2022 again, but we are going to have volatility this year in both. And again, as the risk starts to get realized, that's priced into the amount of debt and monetary stimulus that we constantly have globally across the central banks of the world, then you're going to see the risk yields come up and you're going to see the yields raise. We do like American Express and UPS. We think those are both buys. UPS is 54% off of its high, so it's heavily discounted. And we think that with it diversifying away from its Amazon, 50% away from Amazon by 2026, we like them for a long term. Now, American Express has got a much lower debt to capital ratio, 6.9% versus their peers, 13%. So we think that and debt is at an all-time high, 1.1 trillion consumer debt. With these revolving APRs that American Express enjoys, we think that their profits are going to be really good. Consensus is $15.24 a share, and they've just announced a dividend yield for the first quarter of 17%. So I think American Express on the long term is going to be good through this market, even though it's kind of on the side of people need more access to capital because their options are narrowing. And UPS long term, I think even if we have even kind of another pandemic situation, bird flu, anything like that, the shipping industry will once again be a high demand. So we're liking UPS for that as well.